Results, Steve.
Yeah, we see shares popping here, John. It's a beat on the top and bottom lines. EPS coming in at 88 cents. That's down 33% year on year, but a beat of the 81 cents the street was looking for. Revenue coming in at $6.05 billion, just a slight beat over the $6 billion the street was looking for. Still down 21% year on year. And of course, we can't talk about this without talking about AI. Let me read you a quote from CEO Jensen Huang. Quote, AI is at an inflection point, setting up for broad adoption reaching into every industry. From startups to major enterprises, we're seeing accelerated interest in the versatility and capabilities of generative AI. I expect to hear a lot about this on the call, John, which starts in 7 minutes. I'll have updates right after that.
They're playing it close, Steve. Thank you.
You got it.
And now for a closer look, let's bring in Needham & Company Managing Director Raji Gill for reaction. Raji, it looks to me like data center is the hero here. Fourth quarter revenue, $3.62 billion, up 11% from a year ago, down 6% from the previous quarter. But hey, up 11% from a year ago. Some pretty good news.
Yeah, good news. I think there was some concern heading into the print that there might be an inline guide. They clearly beat on the top line, came in about $200 million above the street numbers, about $500 million above our numbers. There was concern that there was a slowdown in hyperscaler spending, a slowdown in enterprise spending. So they seem to have bucked those trends. I think some of the reasons for that, there is a significant upgrade cycle that's happening to their Hopper architecture. So that could be bucking some of the overall slowdown in the overall data center market. We're seeing a rebound in the gaming segment after the segment cleared out a lot of that channel inventory the last 2 or 3 quarters. So overall, a fairly strong quarter and beat, and kind of given the fact that the expectations were pretty elevated heading into the print, the stock's up 40-odd% year to date. We're pleased with these numbers and this guide.
All right, so just to dig into the gaming piece of the puzzle a little bit more, I mean, revenue there was still down, 46% year on year, but at $1.83 billion, you're saying still not as bad as feared.
Right. I mean, so they've telegraphed that the gaming segment was going to decline in 2022 as they undership the channel market or to clear out all that excess inventory that was built up in gaming for the last couple of years. So they've been undershipping what true demand is for gaming in order, number one, clear out that excess inventory, but number two, to get the gamers ready for their new Lovelace architecture. That's the new GPU. And so that strategy is happening. And I think gaming segment, based on these numbers, are going to be up sequentially, and data center is going to be up sequentially. If you look at the guide for Q1, typically both segments are down sequentially, particularly gaming. So it looks like both segments will be up sequentially in a seasonally down quarter.
Raji, the gross margin guide also caught my eye. GAAP and non-GAAP. GAAP 64.1%, non-GAAP 66.5%, plus or minus 50 basis points. That speaks to the idea that they're not having to discount, right? That their technology, relatively speaking, is strong, even as they seem to be able to ship plenty of product into the data center.
Exactly. So, gross margins were 66.5% on a non-GAAP basis. That actually beat the street by 20 basis points. And, last quarter was 66%. So they, after the inventory, the charge that they took last year related to gaming, related to China data center, they've recovered the gross margins pretty strongly back to kind of where they've normally been, is in the 66% range. But yeah, number one, I think it speaks to the premium pricing they can get for their data center products. But also, I think it also reflects the gaming segment. They're selling a lot of high-end GPUs, the enthusiast gamers. That comes with a higher ASP. Typically, when they roll out a new gaming architecture, they'll target the very high-end enthusiast gaming segment first.
Okay.
And so you're also seeing a benefit of that. So pricing power, both on gaming and data center, continues to be quite strong. Stocks looks like it's up around 223 or so. So it's pretty good.